So hello, welcome to Follow the Money, how the UK attracts global capital and why it matters to founders and investors right now. I'm joined on stage by Jonathan, Jack and Guy. They're going to do a far better introduction to themselves than I will, so I'll just have a quick round robin. Everyone introduce themselves. Firstly, myself, I'm Pete Everson from EHE Venture Studio. I'm the Chief Operating Officer. I'm a ex-tech person. Exited back in 2017 along with Guy Remond. So I do have a background in entrepreneurialism, fast growth companies, and now use that skill with our portfolio to help them scale efficiently and fast and learn from all my mistakes that we made. So Jonathan.
Hello, I'm Jonathan Crook. I'm the Deputy Head of the Venture Capital Unit in the Office for Investment, so I'm a civil servant. The Venture Capital Unit does three things. We work with a select number of UK VCs to help them raise capital from international limited partners. We support 50 to 60 prioritised UK technology companies gain investment from foreign VC and CVC investors. And then we're the point of contact for all VC, CVC engagement internationally.
Hi, I'm Jack Worne, Investor Relations at EHE. Background in venture building and working with startups, raising capital from outside the UK. So been quite successful with that.
Yeah, hello. My name is Guy Remond. I'm the co-founder of EHE. My background is as an entrepreneur. Founded a company called Cake Solutions, which is a software development company. We exited that in 2017 to a sort of large streaming service, American-owned streaming service. Along with Pete, we worked together on that particular project. So my role now is to help the development of EHE Venture Studio and come up with nice shiny ideas that then Pete has to mop up on and bring money in. So we're always looking for money from either the UK or from abroad to fund our funds, so that we can support more and more startups.
Thanks. So I think let's kick off with a reality check. I think the fact is that money is pouring into the UK globally, but unfortunately many founders just aren't positioned or aren't packaged in the right way to make use of that or attract it. So I think just as a kind of an overview of that, I think Jonathan, if you can explain what the state of it is in your world, I think that'd be helpful.
Thanks so much. Well, there's two aspects then to international capital coming into the venture ecosystem. So firstly, it's limited partner commitments coming into UK VCs, and over the past decade, predominantly it's international investment. So places such as US, very strong to a degree, Canada, Germany, France, Netherlands, Denmark, a bit in Finland, Estonia, Switzerland, a touch in the Gulf, and then increasingly places like Singapore has been very strong for years. Korea, Taiwan, increasingly Japan, very, very great location for UK VCs, and a touch in Australia. So that's the international limited partner commitments coming into UK VC. It's probably about 60%, maybe 70% of the overall total. Naturally, the Mansion House reforms are going to change that, but it's probably still 24 months away from an action. Then for direct venture investment, again, it's probably about, and there's lots of data by very credible people, whether it's Bohurst, PitchBook, Dealroom, again, it's about 60% and broadly the same countries that are investing into the UK.
Thank you. So I think, one of the questions I want to ask probably you, Jack, is if you're not building a company with global ambition, then why should global investment take you seriously? What does it actually take a UK founder to make themselves attractive and get noticed and get a seat at the table?
I think it makes it harder if you've not got global ambitions. Foreign investors want to see that there's local value being created a lot of the time, whether it's US or Middle East or Asia. They want to see that there's value add to their region if they're unlocking capital for your business. Very different across the world in terms of the conversations that you'll have with investors. From my experience, the US is a lot more transactional, fast-paced. You've got to move at a high tempo with that. Whereas if you go to the Middle East, it can be more relationship focused, trust focused, a bit slower, and you've got to really kind of nurture that relationship. So if you're looking for a capital, whether it's Middle East, Asia, US, make sure you've got the value add to their region. If it's larger or later stage of investment, larger amounts, they might want to look at how you can move your HQ over there, structure the business over there, so relocate the legal structure, whether it's the US or another region. That'll be one of the considerations to kind of discuss. But outside of that, if you want to attract early stage capital from abroad, make sure that you've got the ambitions in your plan to grow globally, and if you can back that up. So if you're saying you've got ambitions to grow into the US, make sure that your trademark coverage is also covering the US. Make sure you're protecting that future growth in those regions.
Thank you. I think, it's interesting that you mentioned the US, and, for I think myself, Guy, you've all had experience with dealing with the US, both as part of exits, but also getting funding. I think you were talking about the fast pace. Can you give me some examples of that, your personal experiences with it, and, how many steps you have to be ahead and how prepared you have to be versus what you might be used to in the UK?
So, as I said, let's take the US example. It's a lot more transactional, a lot more fast-paced. They're not afraid to email you first thing in the morning, last thing at night, and typically you just have less time to kind of get information together. So when you start those conversations, especially like institutional investors abroad, make sure you're prepared with all your data room, all your answers, all the things that you're going to get asked to cover, and things like cap tables and things. Make sure that you're preparing your cap table aligned to the format that they need. They would typically want to see your fully diluted cap table. They want to understand the share structures in a bit more detail, because from my understanding, they can be a bit more flexible in how the shares are structured over there. So I would say just make sure you're heavily prepared for dealing with US investors, because it can be a shock at how quickly things can move, and you don't want to kind of be exposed and on the back foot in that process.
I think another point as well, they're a huge fan of in-person dealing.
Yeah. I mean, and that applies everywhere. It's much more impactful in-person meetings. The time zones are a slight issue, but just the productivity of investor meetings abroad are in person, where they can get a feel for you. You can show a kind of two-way conversation in a much more elaborate way. And don't be surprised that people will take meetings. A lot of investors are more than happy to take meetings on short notice. It happens a lot. If you're planning to go out there and meet a few investors and just test the water on the market, and you've not got too many meetings lined up before you go, once you're on the ground, meetings will happen. You put yourself out there, and people at the highest level in some organizations will take short meetings with you. And also through that process of having those short meetings, they might not be a suitable investor at that stage of your journey, but they're always giving you feedback and insights into how to refine your proposition and your product, which is you can take forward, but also you've kind of created a relationship and planted a seed there for future, so you can take them on the journey a bit, and they might come round at a later day and become an investor partner.
Yeah, I think I'm just going to elaborate on something Jack's touched on there, that the US culture is very different to the UK culture and the Middle Eastern culture and probably the European culture. They're very direct, which is great. You know where you stand. If they don't like you, they'll tell you they don't like you. If they like what you're doing, they'll tell you they like what you're doing. There is an expectation. They do expect you to reply at all hours of the day. And again, picking up on Jack's point, the face-to-face stuff and the question you asked, Pete, is really important. I've got two hats on at the moment. So from an EHE point of view, I'm dealing with a few people who are going to help me in the US, hopefully to raise some money for the EHE fund. But they don't think twice, about saying, the conversation I had the other day was, we've got this event in Vegas. There's some people we'd like to introduce you to. Can you come out there? And you've just got to go with it and seize the opportunity. And they like that. So I think, it is different expectations over there to maybe to what we're used to. But it can be really fruitful as well. You'll know exactly where you stand. I'm also kind of representing entrepreneurs here. So we were going to have a young entrepreneur sat here called Angus Young, who's building a business. He's just raised his SEIS kind of fund. He's already talking to US investors about what he's doing, getting them excited to the point you were making before. So that he's warming them up, and I think that's really important. You want to build that relationship, you want to warm them up, get them excited, and as you do what you say you're going to do, stay in touch with them, so that when you go back and you say, right, okay, this is what, when we spoke last time, this is what I spoke about, this is what we've actually done. Are you still interested in having a conversation about my next round of investment? So I think sometimes investment can be really quick, but most of the time it takes time to build the relationships up, and a bit of time and effort pays dividend further down the line. And I don't think it's ever too early to have those kind of conversations.
Yeah, thank you. I think just bringing it to a different subject, and this is something that we get asked a lot, is obviously in the UK, EIS schemes are common. How do you structure that tax side of that with overseas investment? Probably Jonathan, Jack, you probably got different views on that.
Touch on that. So non-UK individuals wouldn't qualify for the and benefit from the SEIS and EIS schemes. So it's not a case of preventing you being allowed to raise capital under those schemes if you've got a foreign investor. Where it might become problematic is if you have to restructure the business and change the share structure or change the legal structure of the business, and you're almost invalidating your eligibility, and that can affect your previous investors that have come in under the schemes on the premise that they're going to get the tax breaks and they're going to get the protections that come with them. So you just got to be really careful about future changes, future investment, not to kind of invalidate the benefits of the eligibility of the SEIS just by trying to meet the requirements of a foreign investor.
And just one other point, this particularly applies to the US. So they might not, well, they won't qualify for the SEIS and EIS tax savings, but the valuations in the UK are really attractive compared to the US. So that's a really good reason, a really good hook to speak to an investor. Typically, and this is a generalization, valuations are probably 50% below what they are in the US for the same type of company. So again, really good hook. They're going to get more bang for the buck over in the UK than they are in the US.
I think that's an important point for the structure of the venture ecosystem from Guy there, about it's actually quite attractive, and how there's a natural ladder of escalation of what experienced investors will want to see of a company's growth. And it's just very natural, obviously, take all the SES allocation and note that the government's tax policy has changed with that being increased. I think it's 250 now, or is it 300? Anyway, it's certainly gone up notably. And then you got EIS, and actually this is government obviously incentives and to a degree subsidies because of the tax implications. But we have the third largest venture ecosystem in the world, and we are recognized as being very, very significant in terms of IP development. And a lot of that is because of the market structure which has been created through these incentives. And foreign investors do realize this and do track this, although the majority I engage with obviously come in much later. But going back to that point of a natural progression of activity for a startup.
Just adding to Jonathan's point, we're also third in the world for AI innovation, and that's kind of supported by all the spin outs in the universities and all the work going on there. It's Innovate UK, it's the EIS and SES schemes that are making startup investment more accessible and empowering people to start businesses here that are innovative. But this jump between the UK and the US, for example, is a big incentive, where if you've got a business in the UK that is looking to scale outside of the UK, the uptick in valuation can be quite large, and these foreign investors are more likely to come in earlier in the business if they've got the runway and the local investment secured already, so there's less risk. So the Innovate UK grants and the local investors positioning and filling those rounds make it more attractive for those foreign investors to come in and give them the confidence to take a bit more risk than what they used to.
Is there anything founders need to be aware of in terms of the costs for getting all this in place? Is there any curveballs, hidden costs they need to be aware of?
I'd say legal costs. Let's go take the US point again. The legal costs in the US are much higher. It's a much more complex legal system. Even the IRS system, if you go later down the line and you want to move the business over there, like it's a big black hole and a net that you can't get out of. So legal costs particularly are higher. It's hard to get the right advice. It's more complex. But you know, on the other side of the fence, there's a lot more opportunity, a lot more growth opportunity. So it is a big balance, and it's just about finding that guy. Oh, it's just about finding the right approach to and the timing of when to expand. You know, because you're trying to efficiently use your capital at the early stage, and you don't want to be spending it on legal fees on what if scenarios when you can be putting that into the product and growing the proposition.
Sorry, didn't want to interrupt. I was just I want to go next. So one other point I want to make is that we talked about cost, but there's also a time cost. Don't underestimate how long it takes to get investment. And it's a pain because all you want to do really as an entrepreneur is build your company. And you want to concentrate on the product or the service, and you want to concentrate on building the right team and all that kind of good stuff. But you need to make sure that you have either you leave yourself enough time to do the investment, or you have a who. So sometimes it's a who, not how. So don't worry about how it's. Don't worry about don't worry about how you do it. Just worry about who's going to do it. So, you know, a company we're working with at the moment, InsurTech company, has someone whose role it is, as well as other things, but their main role actually is to go out and get investment. That allows you as an entrepreneur to carry on and kind of do what you do best, which is maybe, you know, run the company and build the company, build the team, and do all the stuff that actually makes the company a success, and the investments handled by somebody else, if possible.
I'd make the macro point about foreign exchange risk. So if you've got an incremental amount of investment stages, particularly from the US, if you look at what's happened to the US dollar this calendar year, and of course other currencies, when there may be, for example, in Japan, the pound against the yen, obviously it's very much an opportunity at the moment for UK-based people. Then the other aspect of costs, I'd sort of spin it the other way, because yes, there's a lot of foreign investment coming into the UK, but particularly in the north of England, there's not always a willingness for those foreign investors to come, and it's sometimes necessary to go to them. And I would really encourage people to indeed pursue that and to be thinking through about the costs of travel. And I think people who are experienced will be very surprised about the value that can be achieved. And also the hustle, because there was someone who was supposed to be on this panel who's not here because he's talking to a Silicon Valley investor, because he was over in the Bay Area, and his story about how he got in front of Mark Andreessen is fantastic and worthy of buying him a pint in admiration. And and we need more of that. We need that hustle from UK entrepreneurs.
I mean, that brings me on beautifully to my next point. You know, the power of networks. You know, I think yourself, Guy, I've had, you know, personal experience in building and investing in a strong network of people to lean on, and you've got to, you know, kiss a lot of frogs to get that network. But you know, we had sound advice in the US, which we still use today, that helps us to enter that market and then ultimately attract and acquire it. You know, the other end of the playbook. So I mean, Guy, do you tell this better than I do?
Yeah, so I mean, as Pete said, we work really hard on building relationships and networks and community. We didn't actually have a sales department. We didn't have a marketing department. There was kind of me, Pete, and an administrator. And Pete would argue just Pete, because I wasn't much help. But you know, the point being that we became famous because of our engineers. So our engineers did talks at conferences all around the world. Our engineers wrote blogs, our engineers wrote books. The engineers passionately talked about what they did, and they were passionate about the technology. they were passionate about the kind of companies as a small company that we were working with. We were punching well above our weight in terms of the companies that we were working with. We were beating companies like Fujitsu Siemens to government contracts and that kind of thing. And that is all the power of building relationships, building network, and building communities. And you can do it through your team. So, events like this, there's no quite often, particularly with the kind of stuff we're doing at the moment, and actually previously at my software company, you never won business on that particular day. You just didn't, but you had conversations that you kind of followed up with people, and people got to know you. And I think that there's a marketing rule. I'm not a marketing expert. There's a marketing rule that says once a company has touched you 7 times in different areas that you produce content, or they've seen you, or they've heard you, or they've read about you, or whatever, then you become a real thing. And so that's kind of theory we worked on. Actually, that led to our acquisition. So what we didn't realize was, while we were doing all these conferences, while we were writing the blogs, while we were writing the books, for 4 years, the company, our acquirer, was following us, and we had no idea that was happening. It was invisible to us. They then came in as a customer and gave us a serious project we had to do, but actually they were testing us before they came in and made an offer for us. So, don't underestimate the importance of doing stuff like this, where there's no immediate line of sight of, an immediate return, but you are building brands, you're building notoriety, you're building credibility within your peers, and then your peers partner with you, and they admire you, and they talk about you, and they kind of help you. There's a whole, particularly in the north of England, I find there's, all the investors work with each other. There's no real competition, because we all have our own specialisms, and we can, they know if we've technically vetted a company, because we have our own engineering team, they know that if they've got through our process, that company actually technically, they don't need to worry about that. We've mitigated that risk for them. They know that commercially we can help them, because we've got, a community of successful entrepreneurs who have both invested in the fund, and they want to give back, quite frankly, most of them, and they want to help these young entrepreneurs to do their thing. And in the meantime, they're protecting their investment, they're protecting EHE's investment, and they're, more importantly, they're protecting EHE's investors' investment. So everything works together. So don't underestimate the importance of building community, building network, and putting the time and effort in from the get-go, even if you don't see an immediate return.
I just made a point about building the network. There's no cost to you to be just really polite, and also to be quite upfront, because you'll be surprised if you go and just say, can I have some help? Can I have some advice? The preparedness of people, particularly international people, to listen to you, and obviously they will then subsequently introduce you to other parts of the network, and not to be incredibly pushy, but just to build a rapport with the individual, do a bit of research before about the culture, do a bit of research about the individual if necessary, and of course there's a plethora of different information sources, but basically it play on human nature. And so you'd be really surprised if you just go to people and say, could I just have some advice? Can I take your view? It does work. Most people do want to help.
The case in point is Jonathan. So Jonathan is responsible for bringing large chunks of change in from investors, VCs abroad, into the UK, and invest in funds and other companies. But honestly, this guy's spent hours with me now, helping me, give me some advice, and maybe introduce me into his network. So even though it's not his role, I'm really thankful for people like Jonathan, who are genuinely just trying to help, even though it's not part of his job role specifically, not as far as I'm aware.
You are within the remit, although I am quite disappointed to find that he's got season tickets at Manchester City. It could be worse. It could be Manchester United, and I wouldn't be talking to him.
We're back down to football. No, I mean, obviously, Angus, as you touched on, Angus couldn't be with us today because he's out pitching, and the American had to change his flight, and that's a prime example. And how he got those meetings was, it's a shame he's not here to tell you, because I know where I can tell it. But he went out there with literally a hard copy of a pitch deck under his arm, found out where this guy went for lunch, camped out there, day one, bang, there he was, tapped him on the shoulder. Do you mind if I spend 10 minutes with you? And he said, sure. And then after that, he said, you know what, there's something here. I want to set up a formal meeting with you later on. And now he's in his third meeting with it. It's incredible. You know, it's worthy of a book. So it's a real shame he's not here, and I'm really not doing that story as much justice. But that's a whistle-stop tour of it. But again, sorry, Guy, you really want this microphone back, don't you?
I'm going to pass it straight back to you, Pete. But just wanted to add as well that it just goes to my point before that putting the effort in now, or you know, a few months ago, he's only just raised his SEIS fund, so he's raised 250, 350 grand or whatever, and he's building his products. But he's been talking to these Silicon Valley investors in a really tenacious way that they admire. So it's never too early to start those conversations, and that's going to pay dividend because the next check he's going to get from America, I suspect, will be very sizable.
So I just made a point about error correction, as in to not get investment and to be turned away. It's good because that's the way you learn and you get that feedback. And of course, you've got to empathize with the VC. And most VCs, I think it's 130 pitch decks to see one that's going to be of interest. So take that negative feedback and obviously hone the delivery or hone the business plan.
Yeah, I mean, that's a good point. I think, you know, want to sort of wrap this up on is what do the early stage founders need to focus on their first outreach? You know, how do they first outreach? So how do they start this? You know, what's the first thing they would do? You know, we're talking about structure, we're talking about making you viable to overseas markets that you're trying to get money from, for example. But what are the first steps? What does the playbook look like?
So I've got maybe a different opinion that there is no set playbook because there are so many subsets of companies and entrepreneurs and how that's perceived. And I think the key thing is to flip it around to empathize in the mind of the investor about what they're after. So, for example, if you are producing a technology which is potentially generational changing, like, I don't know, quantum error correction, you're not going to be talking about revenue. Whereas if you're going to talk to an investor more about software as a service, more retail based, or maybe sort of straight B2B, you're going to highlight the plan to achieve revenue. So it's really horses for courses. But the key thing going back is putting the effort in to empathize what the investor is interested in, what they've historically done.
I'd say, you know, it is the Wild West out there. There's hundreds and hundreds of thousands of people you can be speaking to, and you need to make your budget and your time stretch as the most effective way possible. So do some research on the people that the profiles of the people that you do want to speak to, you know, because you want to make sure you're having the right conversation with the right people. You know, if you've got a tech product that's doing some groundbreaking invention in AI, don't be speaking to a later stage VC investor that's not going to be relevant for another 3 or 4 years. So it's just research the people that you can have the most productive conversations with, and that conversation doesn't have to be investment focused. It can be feedback. It can be how to shape your business and just get some wisdom from them and leverage their experience.
Yeah, thanks. I mean, I think, again, got to remember that same in the UK, you know, US investors, overseas investors, they look at you as a person just as much as they look at your company, you know, number one. So if you've got tenacity, if you've got the drive and you come over driven, then you're going to get that meeting. Clearly, you know, everything else has to stack up, but you are the most important thing about your business. Ideas are plentiful, good founders to follow through are, you know, that's the thing that matters, and there's not many of them.
You know, they respect people that are brave and bold and put themselves out there. They have a lot of respect for that, and you know, so don't be afraid to put yourself out there. Ask for conversations, ask for people's time, because you'll be surprised at how many people do have the time to speak to early founders and they do want to give back.
Okay, I'm looking at the huge crowd. Don't all run, but any questions? No? That's a sign of a fantastic talk then, right? We covered all the questions, answered everything. Well, we'll give ourselves a pat on the back, but thanks so much for coming. We're here all day, so come back if you've got any questions.
Thank you.